3 option strategies to get rich without getting lucky, guys. This is going to be a very important video. So how do you get rich without getting lucky? This is the no fluff. And I'm going to say that first of all, simple scales and fancy fails. We're going to stay away from all the crazy strategies and we're going to focus on consistent income strategies. You can actually see my portfolio. It's up about 7.75% in the past month. I made $227,000. So if you want to grow your wealth, you need to be strategic about it, which is why you don't need that many strategies. You just need to implement the right strategies. The first strategy is going to be the covered call strategy. I've been using covered calls since the dawn of ages, basically since I started trading 10 years ago. And during in college, I had some time, I shadowed some financial advisors, some traders, everyone in the finance field, right? I love finance. That's what I studied. That's what I have a degree in. I was talking to a financial advisor who was managing NBA player money. Okay, this financial advisor, that he has made really good, consistent returns by just selling covered calls. I heard this about 8 years ago. And I was really intrigued. Well, I didn't have that much experience with them. I had a small portfolio. I started off with $2,000. Now, obviously, we have multiple portfolios on this channel. 2 are both at 7 figures. I scale small portfolios, medium portfolios, big portfolios. I've had a lot of experience, and the covered call strategy to me is going to stand out as the top strategy, or one of the top strategies. We have 3 simple strategies in this video, and all 3 simple strategies are actually very, very similar. So the first one, covered calls, popular strategy for generating consistent income from your stock holdings. So from stocks that you already have, why not put them to work? Put them to work so they can start implementing and creating some income for you by selling covered calls. This strategy involves owning a stock. You do have to have 100 shares and selling a call option on that stock. That's why it's called a covered call. By doing this, you collect premiums from the sale of the call option while still holding on to the stock. All right, that's the most important thing. I'm going to show you how to manage this strategy in just a little bit. But simply said, you have 100 shares, and if the stock price goes to the strike price of the covered call, you're in a little bit of trouble. Let me explain what I mean. All right, let me actually show you an example. It's going to be much better for you. So right now I have several positions in my portfolio. Let's go to Apple. This is my biggest stock, and I want to show you, I do have a covered call on Apple right now. Apple is at $223 per share. My average cost is $186 average cost per share. I'm up about $290,000, guys, which is quite a lot of money on Apple. It's been my best play due to the strong brand. I love brands, guys. Branding is the most important thing that I look for before I look at technicals and before I look at fundamentals of a company. It's what I specialize in, brand and tech. All right, so looking at Apple, I have $230 covered call. If Apple goes to $230, I will have to sell at $230. Now, guys, I do not want to sell at $230, but I want to create income. So how do I balance that? What you should be doing is you should be selling out of the money covered calls. So for example, Apple is at $223, I sold a $230 covered call. That does not mean that I'm looking to get rid of Apple at $230. I just think in the short term, Apple is, I'm bullish, but I don't think it's going to go to $230 or that much higher. All right. If it goes to $230, what I will do is I will adjust the strike price from $230 to $235. That will be my goal. Okay. The covered call is very simple. When you sell a covered call, you collect income, you get paid, and you do have to let go of the stock at the strike price at expiration. But before expiration, I can basically close out the stock, and then what I can do, I can close out the option, and then I can roll it higher. I can adjust higher. Usually, I will adjust higher for a gain or for no cost at all right? So I can show you what that looks like. I don't need to do it right now. Everything is in the clear. This is a trade that I put out in my Discord community. Everything is good. But let's just say, hypothetically, Apple went to $230. What I would do is I would simply roll this position, all right? I would roll it up. I'll show you this quick example, and then we'll move on to the second strategy that I will use that can build a lot of wealth and create consistent income. So currently this option expires on 9/20. You can see here on September 20th, all right? I'm going to adjust it to October 18, and you can see here how the 235 strike is worth more. It's worth $315. So the total credit for me would be over $6,000. Now, guys, why is that? Well, it's because when you are adjusting or fixing or rolling an option, more time equals more money. So that's the beautiful thing about options. You get paid for time. You're strategically building wealth, and you're getting rich by time, strategy, and high quality companies. Okay. So on Apple, I'm very bullish on Apple, and I have covered calls, and I'm generating income on the covered calls themselves. So the first strategy is covered calls. That's one of the best strategies to get rich, and you don't have to get lucky. The stock can move sideways, you make income. The stock goes up, you make money on the stock, and you made money on the option. And at worst, you might have to roll it higher, or just let your shares get sold off. There's nothing wrong with buying Apple for $220 and selling it off at $230, and you've gotten paid, guys. You've gotten paid. So, that's one of the top strategies that I would say is over and over again consistent for me. And what I like about it a lot is I control risk. I buy 100 shares. I like the the stock and I know exactly that the stock, about what it's worth, and the covered call, really the worst that happens is I make money, right? I make money. That's the worst that can happen. So I have very controlled risk. I know what my return is. So I have a defined return and there's really no luck. The covered call can provide a consistent source of income. It's consistent source of income, it's safe, and studies actually show that you can make well above average returns in comparison to the S&P 500, which is very important for me. There's a reason why Warren Buffett doesn't live in New York City. He said that he doesn't like other people's opinions. So I like to do the research myself. I like to form my own decisions. And for me, I don't want to get lucky. I want to have a consistent, proven system to make money. I've done a lot of research, right? I've worked on Wall Street. According to a study by the CFA Institute, writing covered calls enhances portfolio income without any substantial risk. It actually decreases risk. So if you want something safer than stocks, covered calls. All right, quick analogy, and then we'll go into the cash secured puts, which is my second strategy. So a quick analogy is, imagine you have a rental property, okay? Options are very similar to real estate, guys. A lot of people think options are really hard to learn. No, they're not. They're very, very similar to how real estate properties function and make income for you. So imagine you own a real estate property, all right? You receive regular payments from tenants, which helps you cover your mortgage, but it also provides income, all right? So think about Apple stock as the house, but the rent is coming from like something like options, all right? So that's kind of similar to how it works. And just like renting out your property, selling covered calls involves owning shares of stock and receiving regular premiums. And basically that's how you collect monthly income. That's exactly what I'm doing, all right? Number two, all right, this strategy is a cousin of the covered call. They actually look very similar. They both have controlled risk and return. You don't have to get lucky to get rich off of selling cash secured puts. All right, cash secured puts are another effective strategy for building wealth without relying on luck. This involves selling put options on a stock you own while having enough cash on hand to buy the stock if the option is exercised. If the stock stays above the strike price, right, you're selling a put option. If it stays above the strike price, you're good. You get to keep the premium. If it goes below, you have to purchase the stock, but that's a good thing. That's always a good thing. If you're selling puts, you should be doing it on stock that you like. Guys, if you're selling puts on stocks that you don't like, something's wrong with you up here. You have to sell puts on stocks that you do like. Don't put yourself in a bad situation. Just don't do it. Don't count on luck. Don't count on emotion. Count on actual facts of what works, okay? Study what works, do what works, all right? And this is how you basically make money. There's no luck involved. You have a system and a process. And the best thing is you have control over your risk, because when you sell a put option, say you sell an $80 put, you know you have to tie up an $80 put is $8,000. You're tying up $8,000. You might collect, let's say, $240, 3%. You might be thinking to yourself, 3% is not that much. I have $8,000 of capital being laid out. No. $8,000 of capital being laid out can't go to zero if you're selling puts on a high quality company that you want to own. In theory, your risk is basically zero because you want to buy the stock anyways. But now you're buying the stock and getting paid 3%. What can be better than that? I mean, please tell me, what can be better than that? You're getting paid to buy the stock. All the stock buyers out there, they're buying the stock at the current price. You are getting paid, literally money in the bank right away to buy a stock, and you get to choose the price. You control your risk. You control the return that you get. You know exactly how much money you're making. So that's how you basically are building strategic wealth. And this is one of the best option strategies to get rich, and you don't need any luck with it. All right. So I wanted to read you this research that I did here. This is from the Chicago Board of Option Exchange, or the SIBO. All right. They show that selling cash secured puts can produce average annual returns of 24% when premiums and potential capital gains are factored in. This strategy is effective because it allows investors to set their entry prices, which I've been saying that all the time. It's basically just saying the same thing I was saying, guys. I'm buying stocks hand over fist, bicep over tricep on the stocks that I want. And by selling puts, I'm forced to dollar cost average. I'm forced to buy high quality companies. What's wrong with that? Bicep over tricep, guys. I'm being forced to buy high quality companies and I'm buying them. And all I'm doing is, we'll talk about the strategy number 3, which is the wheel strategy. All right. I'm getting forced to buy the stocks that I want. Then I'm selling puts. Then I can sell covered calls. So what you'll notice here is that selling covered calls is actually very similar to selling puts, right? You're selling puts to get in. You have to tie up some capital. You get premium for tying up that capital. For a covered call, you have basically the shares that you bought, and now you're selling covered calls, which is you have capital making you money. So the equation is very simple. You have capital that makes you money. So $8,000 makes you, let's say, $240 a month or whatever in 2 weeks. So you have a return, capital, and it's a process. That process is the wheel strategy. I've been using this for a very, very long time because I wanted safety, guys. I wanted safety. I coach with a lot of students and I help them retire. In my Discord community, I'm working with folks that have 50K, 100K, and plus, and they're looking for a system and a process to follow that, to be honest, is so simple that anyone can do it. So they no longer have to work. They can focus on consistent income. Whether, people have different goals. I have a gentleman right now in New Jersey. He has a couple $1 million portfolio and he's looking at generating $40,000 per month plus. That's fine if you reach that scale. If you're at a different scale and you have a 300K portfolio and you just want to be like, I had a student for a long time. I mentioned his name is Denny. I mentioned him many times because he didn't want to do anything interesting, and I feel like that was perfectly okay with me. I feel like that vibes very well with so many students that they don't have the best option expertise. They don't want to do anything interesting. They just want to build wealth without really having to overcomplicate it or betting on what the market will do or experiencing volatility. So just selling puts to get in can generate 3% per month. I've recently made a video on just doing that on something like SPY. So you can do a strategy like selling puts on a high quality company, which is what I recommend, or you can also do that on something like SPY. With SPY, things are very simple because SPY already has built-in diversification. SPY has 500 of the top companies already within it, all right? So I'm gonna wrap up here with the wheel strategy. So the wheel strategy combines covered calls and cash secured puts to create basically a cyclical or a consistent income generating process. First, you sell puts. If you don't get assigned, that's fine. You've gotten premium. You're probably happy. You're like, I made money. Why not? If you do get assigned, you still want to make income, right? You have shares. Well, you sell covered calls. So you have a very good, consistent cash flow system. And I have some research I want to show you in a second, but the goal is to continuously cycle through selling puts and covered calls. This strategy provides a structured approach to generating income. So again, this is something that anybody can copy, whether you're new to option trading or you're already at the, more experienced level of option trading. It doesn't really matter. You can control your risk by selling puts and covered calls, and that's what makes the wheel strategy such a strong strategy that basically no luck, you control the risk, you know what your return is, and that's what I love. That's what I love about these three strategies. And I looked at a back test by Tasty Trade, and they revealed that the wheel strategy, when executed with well-chosen stocks, guys, well-chosen stocks, that's what I look for. That's why I was a financial analyst at Goldman Sachs. I was not a trader. I've never said I'm a trader at Goldman Sachs. I was a financial analyst at Goldman Sachs. I was working in Los Angeles. I was looking at portfolios that were huge. I was looking at strategies, and I was doing a lot of option research. That's what I love to do. I loved option research. Options just fascinated me. Options were just so fascinating because you can create mix and match options. You can make them very safe. You can make them very risky. You have so much control over options, which is why I started trading options such a long time ago. For me, I thought it was at a get rich quick. Of course, I had a different mindset back when I was 18, 19, 20, 21, 22. Now that I'm 30, I basically have a different mindset, which is I want consistent, safe, passive income. That's why you do see me living in hotels, because I'm traveling the world. And I have enjoyed that lifestyle. I've enjoyed trying new cuisines and living a freedom-based lifestyle. It's been very enjoyable. And one day when I have a family, I'll look back at these times and say, I was crazy. I've traveled the whole world. And options have been a big contributor to that. So look, the wheel strategy, you can have an annualized return of 25 to 40% if you go for the more, I covered NVIDIA in a recent video. If you go for NVIDIA, there's a lot of volatility there. So high implied volatility stocks can give you a lot of returns, which is fantastic. That's where you can run the wheel strategy and make a lot of money. So looking at the research, the wheel strategy basically gives you a structured and measured outcome, which is what it's all about, guys. Structured and measured outcome. It's like baking a cake. You know the ingredients, you know how to make a good cake, and then cake tastes good. So that's what I want to help you guys with, make consistent, passive, and safe income. And if you're looking to work with me hands-on, I do have a 6-week boot camp. During that boot camp, I show you how to trade. I show you all my trades, give you access to my Discord community. It's my highest level of coaching. For 6 weeks, I have basically a lot of one-on-one time with you, group coaching sessions, a whole lot's in the program. So if you want to learn more about the program, it is the first link in the description, and I'll be more than happy to show you guys how to scale up, or you can just keep watching the free content that I have here on YouTube. Make sure to subscribe to my channel so you can keep getting videos on creating consistent passive income. That's my goal. That's what I want to teach, and I'll see you guys in the next video.